Good morning and welcome back to Almus Market Mornings. Markets continue to witness sharp, broad-based moves on Monday. Bond yields swung significantly. The US 2-year fell to 3.4% intraday before closing at 3.8%, highlighting the volatility gripping the global markets. Meanwhile, the Chinese yuan continues to weaken, trading above 7.34 as Beijing appears to lean on currency adjustment amid tariff pressures. The real economy is already reacting. Apple stores in the US saw a weekend rush with customers hurrying to purchase iPhones ahead of potential price hikes as most models face new tariffs given their China based manufacturing. JK, China seems to be playing the currency card to absorb some of the tariff shocks. How do you think India might approach its own currency strategy in response?
Good morning, Swaraj. Yeah, I'm not very sure whether China is yet ready to play the currency card to, oppose the tariffs. But yes, Chinese yuan is trading at almost the multi-year high near 7.36. It had this 7.36, slightly backed off now. But I think in the background, definitely there is a fear that that can actually start the next round of bearish phase for the market. So I think already there is a mounting pressure from various countries and also from within US for the administration to consider, reconsider the matter, give some time relief or maybe the rate relief. So I think China is slowly it kind of threats, but not really actually doing it right now. That is how I feel. And of course, if they do, because if it breaks 7.40, which it has never seen, then it will open a big door for Chinese yuan weakness, and then that will drag the INR also, because I don't think rupee can remain immune to big Chinese yuan weakness. As of now, it is stable within the range of 85, 86, and in fact, despite the big bearish pressure on stocks in the domestic as well as the global markets, rupee has remained stable, although it fell towards 86. If you remember, it traded under 85 only on Friday, and since then it has reacted to the various negatives. The steep fall in domestic equities, large FI outflow was also seen on Friday and yesterday, and also, of course, the Chinese yuan. Rupee will remain vulnerable to global turbulence, while domestic macros actually remain favorable. In fact, there are reports that Apple might increase their production in India. So now we know that trade balance in India has also turned into surplus last month, and CPI is lower. Growth is consistent. So overall, domestic macros do not, you know, um, indicate that rupee will be falling in a big way. But yes, if there's something big happening in the yuan, that will not be ignored. That is my view. But overall, on the global markets, yesterday wild market was expected, and a wild market was delivered too. And we had big slump in the equities right from the Asian time into the US time. Then, of course, so there was a good recovery. Initially, some rumors, and then later on, though those rumors were denied of a pause, market still recovered because it apparently, the administration, particularly the Treasury Secretary, has begun talks with some countries. Particularly, it's indicated that he is going to lead for a talk with the Japanese authorities. And interestingly, the talks include one on the yen as well. These are some positive indications. And then, of course, the wild swing in the bond yields, the 20-year, the 2-year rising by almost 20 basis points from the low, and then the 10-year swinging by about 35 basis points from the low, all indicated, that, market may be somewhat overdone on the safe haven trade, and even the S&P 500 and Nasdaq both nearing the bearish territory. So when stock index any market product falls 20% below the peak, and consistently, then it will be considered to enter into a bear market. So that's the reason why market people actually bought back some stocks. Maybe the short covering was there a little bit. So we have seen recovery in the US market from deep oversold territory to somewhat less negative. Nasdaq, of course, ended in a very small positive. And today in Asia, after market hours, we are seeing a decent bounce in all the three major indices in the US. Asian markets are also higher. Nikkei is up almost 2,000 points. That's about 6% higher. People are expecting other markets to recover as well. So there is some glimmer of hope that eventually the pressure on the administration will be too much to withstand, and there could be some sort of a action to stop the market rout, because it's not only affecting the US market, but it's also affecting the global markets. And from talk about the US recession, people are talking about even a global recession. So that is the situation we are. Of course, it's evolving. We still need to observe how things move on, because China, Trump indicated that if the Chinese don't reverse their retaliatory tariff, another 50% tariff will be imposed. And there are also indications that Europe will be imposing 25% on a range of goods from the US in response to Trump's tariffs on steel and aluminum. Europe seems to be gathering a united front, or rather a united voice, to oppose the tariff and its impact on the economy, which is already making a tentative recovery. But I think that could be derailed if this Trump's tariff become reality to the same extent. Now, on the rate side, it's all over the place. Markets are discounting more rate cuts now. Even a 5 rate cut is being talked about. We know at the same time Fed remains on the watch. The dot plot indicated that there will be only 2 rate cuts. At the same time, yields are rising, so it's like a very difficult. Possibly the most difficult market to trade would be the bond market right now. It's pulled and pushed on either side because of the huge positioning and also diverging views on the economy. So that is one aspect, that the aspect of the market that we need to look at. On the Chinese side also, while they are expecting continued stress on the market, they are giving official support to the stock market. They have dedicated money to buy ETFs and the stocks to thwart any major bear push. Because yesterday we had seen Hong Kong market fall by 13% and Chinese market fall by about 7%. So these are wild times which are evoking unprecedented responses from the governments also, and it is very likely to continue if there is no relief given by the US administration. As far as the currency is concerned, I think a relative calm, I would say, yesterday, except that the safe havens of yen and Swiss franc were in demand. But otherwise, Europe is now Euro is actually now trading slight short-term bearish bias because of the retaliatory tariff that they are proposing, but nothing threatening the positive medium-term momentum that is gained in the recent weeks. Of course, Japanese yen was stronger, but with the recovery in risk that has weakened towards 147. I'll be very closely watching what discussion happens between Japanese officials and Treasury Secretary, particularly on the yen, because yen has been a weak currency for several years, and that could be one target of the US administration, to get the yen to be stronger as well. From the Japanese side, they have been saying that we have been making huge investments into the US, so they will also be negotiating in that regard. On the other currencies, they have been quite, I think commodity currencies were very weak, but they have since recovered with the recovery in risk. Gold had another stab at the 2980 mark or 2970 mark yesterday, having seen a high of 3150. The sales in gold and silver, they were not driven by, particularly in gold, was not driven by any fundamental factors, but it was because investors tried to lock in some profit in the gold to make up for their losses elsewhere. Now, once the market recovers, I think gold will not stay at the lower level unless we see a big rise in the US yields. So overall, while turbulence may not be as high as yesterday, the uncertainties on the policy as well as the course for the markets will remain even today also. Thank you.
Thank you, Jack. And Lot of uncertainty, but as you said, currency market was very well behaved, except for safe haven currencies like Swiss franc and yen, which got some demand. The overall the markets were on the calmer side, except when we on the contra, if we look at the equities, the bonds, they were all over the place basically. But today it seems to be a better days. Some profit taking seems to be in the play. US futures also showing markets trading higher in Asian markets also. They are seeing there some sort of recovery is going on. When it comes to the rate cut anticipation by markets, it's that seems to have gone haywire. Dot plot by the Fed in its last meeting indicated two rate cuts, but markets are now anticipating five rate cuts. So bonds are going to be difficult to trade. For rupee, we are seeing some weakness, FII outflows, plus we'll need to keep a close eye on the Chinese yuan. As of now, it does not seem to be a big risk, but as JK mentioned, if 7.40 in dollar CNH breaks, that might invite a much larger move, and that's where the rupee traders also need to pay some attention. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.